Hey guys, welcome back. This is Fahd Dawood. I wanted to record a very short segment of some thoughts that I've had over the past couple of weeks based on what's been coming out into the market, some of the stuff that I've seen from other developers and other agents, brokers, so to speak, people who are friends of mine. So I just want to actually talk a little bit about that. I'm going to call this the Daily D. And it's actually a play on the Daily V that Gary Vaynerchuk does. If you haven't heard of him or haven't checked out his vlog, highly recommend it. If you're into business or an entrepreneurship, really highly recommend it. So we're going to talk a little bit about speculation today and capital appreciation, because whether you like it or not, when you talk about real estate investment, invariably at some point in the discussion, capital appreciation comes up. So what can I expect if I sell this property 2 years from now, 6 months from now, 1 month from now, right? This is always going to come up, and I get this question asked all the time. Do you think I could sell this closer to Expo 2020? What do you think would be my profit? Now, yes, we've seen some real roller coaster cycles in Dubai in not the very recent past. Like over the last 10 years, back in 2007, 2008, we saw property prices go up by 200%, 300%, right? And just in 2013, September to 2014, February, I myself have witnessed prices in some areas, specifically land. This was one land deal that I was personally working on. I've seen prices go up by 45% in a 6 months period, right? However, we're moving away from that. The market is moving away from that. So when I see developers promising a 15 or a 30% price increase in 3 years, that makes me very skeptical. It almost makes me a little bit it makes me a little angry, because if you see the major developers like Imar, Nakhil, some of the bigger names who've been in the market long term, they never make these claims. But some of the new entrants, sometimes even in actual PR releases, will say, you know what, buy today from us and we expect that prices are going to be going up by 30% in 3 years. Well, to those developers, I would literally say, can you put your money where your mouth is and give me a posted check of 3 years later with 30 or 15% capital appreciation on my investment today? Probably not, right? And then there are agents out there in the market as well who are going to promise you the same. They're going to advertise on Facebook or LinkedIn 30% capital appreciation, 15% capital appreciation. Now, to be fair and honest, a general rule in Dubai has been that whenever a property comes close to being handed over, the general price increase is 10 to 25%. Generally that's true, but you know what? Here's the thing about business. What everybody thinks shall happen rarely happens. So that capital appreciation is only going to be dependent on what the macro factors are in the market at that time. So if you have this one tiny teeny studio in Dubai Sports City, but at the same time there's 500 more studios that have come into the market and there aren't enough buyers or there aren't enough tenants, well, guess what? You're not going to get that capital appreciation. So there's a lot of other factors that come into play. I'm going to just make 3 very simple points. Number 1, look, if you have some capital and are looking to make a 30-40% capital appreciation gain, so to speak, real estate honestly is not the game for you. I honestly suggest that you should go and put your money in to a business. If you have a great idea and are able and capable to play the role of Chief Financial Officer, Chief Marketing Officer, HR person, CEO and worker. So start a business, you'll see the best gains come from that. So that's one end of the spectrum. The other end of the spectrum, you put it all in the stock market, or you could put it all in currencies. You probably could lose it all. So that's the other end. But you could make very high capital appreciation. The middle ground and the safe ground is to put it into real estate, right? With real estate, you're looking at, forget the capital appreciation right now. You're looking at net income. We call it rental yield, not return on investment as a lot of people say. We call it rental yield, which means the rent that is generated on a property every year. You're looking at a rental yield in Dubai of 7 to 9%, generally speaking, which is still pretty high. So this is 9% net income in your pocket. So if you put 100,000 dirhams into the Dubai market, you are looking at approximately 9,000 dirhams net into your pocket at the end of the year. Is that good enough for you? Well, if it is, then real estate is the name of the game. If it isn't, look elsewhere. Do not speculate with your money in the anticipation that I would invest today and after 2 years or 1 year or 6 months down the lane, I am going to be able to flip this property and make more money. Now, don't get me wrong, a lot of people do that and a lot of people come out successful and some people get burned. Well, in my history, in my experience over the last 10 years, I've seen a lot of people get burned who are trying to flip properties. I don't want to get there. I don't want to get into it. But of course, I do understand that human beings like a little bit of uncertainty. They like the fact, they like a little bit of certainty and they like a little bit of uncertainty. The fact that you're investing, you want to be able to actually get great gains. I like that. I understand that. All I'm saying is speculation with real estate is not the name of the game. If you're going to go about it doing that, then the risks are yours and do it with your eyes open. I'll tell you something very simple. Some people sometimes ask me, well, Fahd, what is the chances of this property increasing in value in about 5 to 10 years? Is that going to happen? I'm going to tell you something very simple. Look, when prices go up of a property, it depends on a lot of things which you don't control. You don't bring any value except for your decision that you bought at a certain time. You don't bring any value to that property price going up. Property prices can go up based on the global economy, the local economy, the leaders of the local economy. So alhamdulillah, we have great leaders in the UAE and Dubai with a very grand vision, and they are busy implementing that vision. It also depends on long-term factors that you have no control over, such as supply of how much stock or inventory is available in the market, and also demand. Is the population of the city or the country that you're in increasing, thereby increasing need for housing and real estate? For instance, for me in Dubai, there's a clean litmus test that I always do to really, you can always go to the Dubai Statistics Center to see if the property prices have gone, if the population has increased or not. For me, I'll go to Carrefour, right? If I'm in Carrefour and I find families are lost in the aisles of Carrefour, I know that there are new people coming on over here because they've come over there, they're shopping and they're kind of lost. They don't know where they're going. This happened a lot during the Arab Spring 2011 to 2013 period, when there was a lot of uncertainty in a lot of surrounding countries. A lot of people were moving over here, whether it was a short term or long term. These are the macro factors that affect capital appreciation, and you have no control over it, right? Do you? There are micro factors that you should look at when you're making an investment in a property, right? You should look at the location, you should look at the quality of the building, you should look at the rental income that you might be able to generate in that area. And it's very simple to know that because you can look at other rents in that area. You should look at the service charges. You should look at where the city is growing towards. Now, if you look at all of this, then you take the things that you don't control, allow them to complement your decision towards where you should buy, but do not let that dictate where you're going to buy. Rather, look at your investment as a business unit. So a business unit has an investment, which is your property that you buy, has customers, which is the tenant that you get, and has maintenance and expenses for operations. which is somebody you might appoint to manage your property, or the maintenance that comes with the day-to-day tenant living in a property. And then at the end of the day, your business should generate a net income to you, which is profit. If you are getting that in terms of rental yields, I personally suggest that you should be basing your investment decisions on that, and then letting the world economy, the local economy, and what the vision of the leaders is doing in the local economy, let that complement your decisions, but do not let that dictate where you might be investing. So that's just, I want to get that out of my system. It's been bothering me for